The U.S. Federal Reserve, Fed, raised interest rates by 0.5 percentage points, to 0.75% to 1%, in line with what analysts expected and what Fed Chair Jerome Powell has previously communicated. The invasion of Ukraine by Russia is causing tremendous human and economic hardship. The implications for the U.S. economy are highly uncertain. The invasion and related events are creating additional upward pressure on inflation and are likely to weigh on economic activity. In addition, COVID-related lockdowns in China are likely to exacerbate supply chain disruptions. The committee is highly attentive to inflation risks, the Fed said, adding that ongoing increases in the target range will be appropriate as they expect inflation to return to its 2% objective and the labor market to remain strong. Also, the central bank decided to begin reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities on June 1. Bitcoin, BTC, and Ethereum, ETH, fluctuated right after the announcement. While stocks rose, the USD fell, and bonds also fluctuated. During his press conference today, Powell said that the 75 basis points increase is not something we're actively considering. The decision today followed comments from Fed Chair Powell in late April, saying with regards to interest rate hikes that it is appropriate in my view to be moving a little. According to multiple sources, including a Bloomberg report and an article by economist Mohamed El-Erian, interest rate swap traders have already fully priced in 50 basis point hikes for each of the next 3 Fed meetings, in June, July, and September. If it were to materialize, such a hiking trajectory would be the most aggressive seen from the Fed in 3 decades. Commenting ahead of the announcement from the Fed, Tony Farron, managing director at Mishler Financial Group, said traders are watching closely whether the central bank appears open to even more aggressive action, such as a 75 basis point hike, at its next meeting in June. The market would take TH. For his comments to seem dovish, he'd have to shut down the talk of 75 basis points. And while I don't think he'll endorse it, I don't think he'll shut it down, Farron told Bloomberg. Meanwhile, the legendary trader Paul Tudor Jones told CNBC on Tuesday that he is still modestly invested in crypto despite the challenging macro environment. Right now, I'm modestly invested and I would think that it's going to have a bright future as we roll through these rate hikes, Jones said.